Hi guys, welcome back to my YouTube channel. Today I'm going to give you the 3 biggest mistakes that I see as an accountant that practices in the UK, works with small businesses and property investors. I'm going to run through the 3 biggest mistakes I see on a daily basis new business owners and even established business owners making. But before we jump into things, please do make sure you give this video a thumbs up and also make sure you subscribe with the notifications on so you see the more awesome and brand new videos that we're posting 3 times a week on this YouTube channel. Okay, so mistake number 1 we see property investors and business owners making is when they've set their company up, they're not treating it like a business. They're perhaps not even using a business bank account. They're not keeping details of their receipts. They're basically just treating it as if it's one of their spare bank accounts, and they're not really keeping track of the income and the expenditure. They're not using the accounting software. They're not working with an accountant. And essentially what this means is they don't know what their profit is. They don't know what tax they've got to pay, and they're not positioning themselves for business success. If you can't manage your cash flow, if you can't manage your income, if you can't manage your expenditure, how on earth are you going to manage to grow and scale your business? So to overcome this, we'd always suggest making sure that you keep in track of everything. Make sure you've got a separate business bank account. Make sure you're working with an accountant who works in your sector. Make sure that you're using good quality accounting software, separate bank accounts. You're keeping details of all of your receipts. You're keeping sales invoices. You're keeping absolutely everything, and it's all secure, backed up, ideally on software such as Zect. You're using accounting software, Xero, QuickBooks, anything like that. And this is going to maximize your chances of business success. 2 is, I've said it once and I'll say it again, know what the director's loan account is and do not get caught in the tax trap that lies within it. Essentially, when you put money into your company, great, your company owes you that money. It's a director's own account, you can withdraw it tax-free, but do not go over and above this. If you put £5,000 in, don't take 10,000 because you will pay tax on your director's loan account. If your director's own account goes over £10,000, which is where it's basically an overdrawn, so you owe your company more than £10,000, you have to charge interest on this. If you don't, you need a P11D, and there's a taxable benefit. You want to try and avoid that. If that loan is still outstanding 9 months and 1 day after the year end, 32.5% tax charge on that. You want to avoid that. So make sure you are using accounting software, you are keeping track of your director's loan account. You need software to do this so you don't go overdrawn and get a nasty surprise tax bill at the end of the year. Mistake number 3 is not having a clear vision, a clear strategy, a clear sense of purpose in why you're in business. No business or no successful business is really set up just to make money. They want to change the environment they work in. They want to do good things. They've got a big picture of success. If you run your business and you say, okay, yep, I'm going to see what happens, at the end of the day, nothing will happen. If you're a property investor and you want to make £50,000, plan out exactly how you're going to get there so you know what KPIs, what metrics you need to be tracking in terms of revenue, in terms of your budget, because if not, if you're spending money wherever it gets drawn, you will find yourself making unnecessary losses and not running a very lean, profitable business. And today, with software such as Xero, you can do budgets. So you can look at month on month exactly where you're supposed to be compared to your budget, compare it to your plans, your business plans, and where you want to take business. And as a result, you can keep your costs as low as possible, which means maximizing your profits. So make sure you definitely are doing this. If you've got, make sure you've got a business plan. If you don't, speak to your accountant. They will be able to help you with making one. It's very important for all early stage businesses to have one of these in place because it really will maximize your chances of success. So there are my 3 biggest mistakes that I see people make on a daily basis when it comes to running their business. Short, sweet, to the point. I hope you really found this video useful. In Friday's video, we're going to be talking all about capital allowances and how they work for businesses. It's hugely valuable and it's going to save you a lot of money in tax. So make sure you've got those notifications on, because as soon as we post it Friday at 7, you need to be on this so that you're save as much tax as possible. But as always, if you find this video useful, please do like, comment and subscribe, because it helps as many people as possible see this video and it helps you save tax. Bye for now.